Big proponent of blockchain technology in its early phases. He was also an early investor in the creation of Ethereum and Shares, which is now Neo, and many other notable blockchain projects. And he's on and serves on the board of stewards for the Opolis Employment Commons. And most notably, he's a former professional hockey player, which is probably the most interesting thing of all of this. So we'll just talk about hockey the entire time. Barry, how you doing?
Good. Thanks, John. Thanks for having me. I love Opolis, and yeah, we can talk hockey all day, man. Could go for hours here.
Well, so you played. I mean, let's talk about hockey for a minute. So you played what, 8 seasons?
Yes. So I played 8 years professionally. Prior to that, I played college hockey at UMass Lowell. So they play in Hockey East against a lot of the big schools: BU, BC, UNH, Maine. Great hockey league there. And yeah, that's where I kind of got my start, a degree in finance, and graduated there and started my professional hockey career actually in Las Vegas. I like to say I played in Vegas before. It was a cool thing to do. Vegas got their NHL team a few years ago. I knew that was going to be a huge success, living and playing there myself, knowing the fan base there. But yeah, I started out playing in the East Coast Hockey League, which is kind of a AA baseball equivalent, if you will. Was able to work my way up to the AAA level. Played actually for the Colorado Avalanche's farm team for a couple of years. Most of my time was with Pittsburgh Penguins farm team out of Wilkes-Barre, Scranton, and went to camp with Pittsburgh a couple times. Actually, both years they won the Stanley Cup, so that was pretty exciting and fun to be around. A cool experience. Get on the ice with guys like Sidney Crosby and Evgeny Malkin, some of the best players in the world. Was really fun experience. So had a great hockey career. That whole time I was spending time learning about crypto and investing in crypto.
Okay, so how you're a hockey player. You know, most of these guys are missing a bunch of teeth and like they just live and breathe hockey. They don't do crypto. Like, how did you learn about Bitcoin and how did you learn about all this stuff? Because you were sure. I mean, you were early.
Yeah, no, I was fairly early, and I do have all my teeth. They're not all real though, so that's I have the crooked nose too. But
did you break it a few times?
I broke it once, yeah.
Fight or just like an elbow or
just a stick in the face, nasty stuff. But no, well, I just was always very much into investing, right? And so went through college during the real estate crisis and graduated in 2010 and learning about that whole crisis in 2008 and watching it play out, I kind of felt like, okay, there's really something wrong with the system here, right? Like this, what's going on? So I went on this mission to kind of really learn about money and economics and the history of all that as well, and learn about the systems we currently have through central banking, et cetera. And over time, that kind of just led me into learning about Bitcoin. And I first heard about Bitcoin through Max Kaiser in 2011. He was kind of talking about it like real early,
that's
$1. Real
early. Yeah.
And I wish I could say I invested that early on. Unfortunately, I just learning about all this. I was like, oh, okay, that sounds cool, but I don't really understand it. So it took me a couple of years to really understand Bitcoin, but I watched it throughout 2012. There was that whole bubble it had through the economic crisis in Cyprus there. I think they had like a run on the banks and Bitcoin really spiked to like $250 and kind of crashed again. And after that, I kind of learned more about it. I was like, okay, this is something, and finally got in after that. But yeah, it's I don't know. I've always been an extremely curious person. So learning about, once I kind of grasped the concept of Bitcoin, I was hooked, and would read stuff on Reddit, on all kinds of different forums on the internet, trying to learn anything and everything about blockchain technology and how we could change the world with blockchain technology. Yeah.
So then I have a similar path. I mean, I heard about it in 2012, but I literally did not understand it. Mm-hmm. I didn't read the white paper, the Bitcoin white paper, until probably 2014. I don't think I even read it until then. But then that was on the heels of meeting Vitalik's dad actually in early 2014. So
wow, very cool.
happenstantial. Met him at a random conference in a small, intimate affair in San Diego, and it was just random that he was there. And I got a hold of the white paper later that year, and then so I read that first, but then I didn't understand half of what was going on, so I had to read the Satoshi white paper, and I'm like,
sure,
okay, I kind of get it, I think, but I didn't. Like, I thought I did. I had no idea.
Right.
But
right. Well,
yeah.
I have a term for that sort of discovery. I call it the Crypto-phany Effect, the crypto epiphany. It's like this process, depending on how deep and fast you go into crypto, it takes a while. I mean,
it's a red pill moment, man. It's like go down the rabbit hole.
Yes, yeah. But it takes like a year sometimes. I mean,
well, it takes a year, but then once you get it, though, don't you feel like it's just a light switch that just goes, oh,
absolutely, it's a crypto-phany.
Yeah, the rabbit hole ends with the crypto-phany. Absolutely, 100%.
Right. So I love that because once you get it, I think most people are hooked. They really get it, and then they understand it. But that skepticism is pretty big, and the learning curve is big, right? So it just takes time.
Well, and I think the learning curve is steep for those. Or maybe some people never get there if they're just looking at it as an opportunistic thing where it's just like, oh, I can just make money. But like you said, this technology, not only from a sound money standpoint in Bitcoin's case, or like a immutable store of value, but like Ethereum is a concept, a distributed ledger technology like that could literally change the way we do all business, right? Like we do all human interactions, value transfers, pretty much anything.
Absolutely. Yeah. And I went down this rabbit hole after that. It was reading about all kinds of applications for blockchain, and got super excited about it and continued to learn about it throughout my hockey career.
So are other guys in the hockey world about this?
So it's really funny, going back to like 2013 and stuff, like when Bitcoin blew up to over $1,000, a lot of guys on my team are like, what's this Bitcoin thing? It's like, oh, I know a bit about Bitcoin, and I kind of describe it to people. I'll say, hey, you should learn about it, really, and take the time. And it's funny because they would all crash and everybody would be like, oh, that's, probably a scam, all this, it's for criminals. Scam. Yeah. All the stuff you read in the media. And, they kind of move on, and it's funny, right? 4 years later, it goes to 20,000. Like, hey, do you still own that Bitcoin stuff? What is this? It's crazy. And again, everybody on my team is like, hey, what's this Bitcoin stuff? And it's like watching this cycle play out.
Did anybody buy any?
Yeah, guys bought some at different points in time. Yeah, absolutely. Some would be like, oh man, I bought some at 15,000. It's like, and it crashes to 3,000. So they're really upset, and like, it's like, it's long term. Just wait,
just hodl
learn about
baby.
It. Yeah, hodl.
Well, if they hodl it, they're back to par now.
Exactly. So I see sort of the same cycle. I think we're going to keep seeing these cycles for the next decade, right? As people learn about this and people adopt it, and especially the institutional wave I see coming here to help grow adoption and use. So,
well, that's part of what we're doing with Opolis, right? Is trying to make an actual functional ecosystem so that people can get involved in owning digital assets and being rewarded for contributions, stakeholder capitalism, etc. So we're happy to have you on the board, man. It's great. So you're an early adopter of this through your company, Merkle Mountain, right? So
yes. So I retired it from hockey in 2018, and was kind of trying to figure out what I wanted to do next. And I had actually started a small business when I was still playing hockey. I was selling hockey sticks on Amazon, actually using Amazon FBA. Did really well with that for several years. And
so these are like game used sticks or what?
No, not game used sticks. So I was like, all right, I want to try to sell some on Amazon, right? I mean, a lot of people try to do this.
Oh, so you actually created a distribution channel for actual
yeah. So what I did is I was like, okay, I know a lot about hockey. So what's something new in the hockey realm? And this company out of Canada, they're actually on the equivalent of the Shark Tank on, was it CNBC or whatever? There's a show called Dragon's Den. It's the Canadian version. There's this company called Raven Hockey, and they made basically professional grade sticks for kids. So, serious young hockey players play travel hockey, etc. And so high quality sticks, and nobody was really selling these things online in the US. So I was like, hey, I'm going to put these things on Amazon. And we did like 6 figures in sales in the first year of being on there, and ran it for several years. And so I learned a lot about how to sell on Amazon. Eventually a lot of people caught on, and that's the issue with Amazon, right? Like it's,
well, it's great when you're an early adopter,
right.
But then when everybody follows, it becomes a really noisy sea of
exactly,
insane competition. And
yes.
then it almost becomes, not worth it.
Right, exactly. And that's kind of what happened with that business. A bunch of other people started selling, and it comes down to who has the best price, right? I mean, I had the best reputation because I've been doing it longer. But it's funny, there are crazy games on Amazon too, review wars. I mean, you can just sort of have people write bad reviews about another seller. I never took part in any kind of games like that.
I never did anything like that.
Ruin the competition. No, I never did anything like that. But it's really interesting to learn about, selling on Amazon and how Amazon works from the business side, right? As a consumer, most people love Amazon. It can be very difficult as a seller.
Interesting. So tell us about Merkle Mountain then. So you've got your consulting practice now in Boulder.
Yeah, absolutely.
And the Boulder Web3 scene's been pretty vibrant over the past few years. I mean, we've obviously had quite a bit to do with it, but tell us from your perspective, how are things looking up there? What's Merkle Mountain up to? What are you guys doing? What are the opportunities you guys are working on? What are the, if you can talk about any of it?
Oh yeah, absolutely. I'd love to. First, just want to thank you, starting ETHDenver. I mean, Denver, Boulder here has become sort of Silicon Mountain, blockchain mountain here, a hub, if you will. So it's really great. There's a great community of people here in the blockchain space, and a lot of tech companies here, et cetera. So that's fantastic, first of all. But with Merkle Mountain, we kind of born out of a partner, a few business partners I had in different things. And we had guys from the oil and gas industry come to us, and they were interested in mining Bitcoin. And it's funny, some of these old timers, called it manufacturing Bitcoin. And say, hey, how do we, we have a lot of oil and gas here. See, people are doing this with flare gas, et cetera. How do we go about doing this? And at the time, Bitcoin was like $5,000-$6,000, and this was before the pandemic. And we were okay, great. We'd love to help you out. We can help you do this. And so did a lot of due diligence and research and connecting the dots there for them. And then the pandemic happened, oil crashed to negative, and they kind of backed off. But since the price came back for oil, and seeing obviously the price of Bitcoin skyrocket here, they're like, hey, really got to do this again, back on board. So we're doing that. We have a couple different arms of what we're doing with Merkle Mountain. We're also working with early stage startup project, blockchain project, helping them get off the ground, and through our network of contacts and just knowledge about different technologies. One of my other partners with Merkle Mountain, Blake Burris, has extensive sort of VC experience. He was funded by Facebook a couple times. So he's kind of the serial entrepreneur who has been real successful. And so between the two of us, we started this, and now we're even looking at, it's crazy, since the price of Bitcoin's gone up a lot, and Ethereum, et cetera. We've had a lot of people in the institutional space kind of come to us, hey, what's going on with this? We've been reading about it more and more. So we're actually looking at, it's not definite yet, but we might launch a crypto fund as well for sort of high net worth individuals, family offices, et cetera. So I have a couple things in the works, but we really have a focus on helping these early stage startups in the blockchain space.
Cool. And which brings me to our favorite topic, which is the employment commons, right? So
yeah.
How did you hear about Opolis?
Yeah.
Do I know the answer to that? Oh, was it Yev?
Yeah, so here, I'm wearing it right now. I got this shirt, this cool shirt,
yeah,
right?
There you go.
I got this, so I saw this table, this Opolis at ETHDenver, And it's funny. I'm really big on intuition, right? And I just had this feeling. I didn't fully understand Opolis at the time. I was learning so much about different projects, etc. at ETHDenver. I was like, that Opolis project really stood out to me, though. So, and then I remember Blake had mentioned talking with you. So we set up a phone call, and I just remember really hitting it off with you, John, on what you're doing and just your knowledge and background and expertise in the space of what Opolis is doing. And I was like, I kind of had that epiphany. I was like, holy crap, this is amazing. What John and the Opolis team is trying to do. I want to be a part.
Thanks, Barry.
Yeah, so I was really impressed.
We like to think so, right? I mean, whether we're just a bunch of crazy people or we're all actually onto something, I guess we'll find out.
Hey, that's part. Yeah, we'll find out. But I really think you guys are onto something, and so I was really happy that you asked me to be a part of the stewardship board. Take a lot of pride in that, and happy to be a part of the journey.
So let's talk about that. So for those that don't know, can you give everybody sort of just a quick high level of what the Board of Stewards is for the Employment Commons, and how you see your role and how that's going to kind of evolve as we start looking at governance and decision making and all that?
Yeah, absolutely. So I think until Opolis is able to establish all those governance principles and different aspects of the commons, et cetera, you need some group to help govern and navigate this road, right, in the early beginnings. So I think it's part of our job and mission is to find the solutions for what the problems Opolis is trying to solve, and helping people, and this idea of sort of stakeholder capitalism, right, where we're all a part. We're not just, it's not shareholder capitalism. We're just trying to enrich ourselves through the Opolis.
Exploitation of consumers, right?
Exactly. That's not the mission. The mission here is that win-win, right? Win-win-win. Everyone wins and
reciprocity.
Benefits.
That's the key. It's reciprocity.
Absolutely. So I feel like part of our mission in being on the board is to nurture that and help get Opolis off the ground.
Yeah, it's been kind of an interesting experience. Just to give our listeners some insight into this, we meet every week, right? So we have about an hour-long conversation between 6 or 8 of us, 5 people on the board with some advisors and other people contributing to the conversation. But to go a little deeper with this, the commons, the employment commons, is a cooperative, and eventually the goal is to distribute the governance and decision making largely to the membership, right, to decide on what makes sense for them, and we're part of that, right? So it's a very aligned activity, and it goes down from what healthcare benefits we might offer all the way to the actual token mechanisms, the technologies that we use, the benevolence mechanisms that we implement, to make sure that we're actually setting this up for long-term success, right? So we have a threshold of 1,000 members that we've got to hit before we start transitioning decision-making to the community. But I think there will always be some involvement from the Board of Stewards in, sort of a checks and balances to make sure that there's, we're staying on track.
Certainly.
I suppose you could say there's somewhat of a veto power in some ways, depending on what would happen. We've run through a lot of different scenarios on things that the membership could vote on and change to actually hurt it. But, we'll have to see how those things go. So
absolutely.
The token, the rewards token. So you've obviously been involved in the review of the paper and contribution of all that. Tell everybody what you think of this as it relates to this next generation of capitalism, and what do you think?
Yeah, absolutely.
I mean, this is incredibly experimental stuff, right? So,
absolutely, this is the bleeding edge, right here. We are on the cutting edge here, exploring space, right? Like the background.
You're
the cryptonaut here. Yeah, there you go. Yeah,
I might want to put some sunscreen on though, with all that sun you're getting.
I know it's blinding here. No, but I'm super excited about the rewards Stewards program, a couple aspects of it, just for people to understand it: the staking aspect, the payroll mining aspect, the referral aspect, and
Consumption's the last one, yeah.
In consumption, right? Okay, so yeah, and right, like we've talked about, we don't, maybe these aren't worth anything. Maybe they are worth something someday. We don't really know, right?
That's the grand experiment, right? I mean,
yeah,
letting markets decide what the real value of an asset might be.
Sure.
I mean, personally, I think this is maybe one of the gutsier ways of doing this stuff, because like literally the market's going to tell you what it's worth, if anything.
Right.
And that's, but it's on the other hand of that, it's really great because then we're not in, we're not in control of any of that. Like the board of stewards and the employment commons could never be, you couldn't come back to us and say like, oh, well, I mean, like you would never go to an airline company and say, well, your airline miles are being traded on. So what, dude? Like, we're just giving people a digital asset for contribution. And to us, it's just, a thing. And if somebody else decides that there's value enough to want to buy it from you, I mean, I don't know, we're not, I have no way to know that. Like, I have no way to know that any of that would or could ever, I mean, it could happen, but whether or not it does, I think that's the greatest part about this is like, to me, the ICO boom of 2017, there was so much like arbitrary, puffery, right?
Oh, absolutely. I mean, everything was an ICO project. I mean, no matter what you had, a token had all the value in the world. It was worth $50 million.
Oh yeah, we're $50 million, $150 million market cap, $300 million market cap.
Right.
It's
just
like
absurd. Yeah.
And eventually, I do think there is a correction when real metrics start hitting the crypto world. Real sustainable businesses, I think the ones that don't have sustainable businesses are going to be less desirable and people just aren't going to want them.
Yeah, no, agree 100%.
So I think that hasn't happened yet. We haven't seen the great sort of purging of, expletive coins, right?
Right.
Coins.
Well, we're still, we're still in the venture aspect, right? We're venturing in the space here, finding out what would have value, what does have value, what works, what doesn't. I mean, if you look at some great projects in the past few years, like Chainlink really, sprouted up there, and I think shows a lot of promising potential, and a lot of other projects.
They actually have a real business, though. I mean, they actually have like a real ability to, monetize services, technology, because they're really providing data services to smart contracts, which is a really solid foundation compared to if you're just going to build an open source protocol, from a value creation and sustainability standpoint, it's really difficult because how does that get valued? I mean, unless there's just natural supply and demand, like Ethereum, where I need it for gas and I need it for staking and there's real utility, some of these protocols that they kind of made up utility, they don't really have utility.
Right.
You could buy stuff on our website with it. It's yeah, I
don't think so.
You don't understand economics. If you think that's an economy, that's not a payment token is a really bad use case. So stakeholder capitalism. So when you look at the employment commons as a consumer, so when you think about this program, what's the most exciting aspect of the three? So consumption obviously is just a solo sport. Referrals has a lot of surface area. And then staking is sort of that almost kind of investment mindset. Which one do you think?
Yeah, absolutely.
To you?
Well, I've always been big on staking. I looking at it from the investing perspective. I have this other term, I have that Crypto-phany term I came up with. A lot of people refer to staking as bonding, but to me it's calm bonding. I'll explain that. If you look at
what
Ethereum,
did you say? Calm bond?
Calm bonding, almost like compounding, calm bonding. So
okay.
Commodity, a bond, and compounding in one word, compounding. But if you look at Ethereum, for example, staking Ethereum, Ethereum is the
December
bankless
1, by the way. Shout out to Danny, Ryan, Vitalik, and all of the ETH2 guys. But like,
absolutely,
December 1.
yeah, phase 0.
Yeah.
It's
Oh,
exciting.
I'm in.
Yeah.
Are you?
I'm working on getting my node up and running. Gonna absolutely take part.
I'm doing the same thing. So yeah,
Excellent.
I'm on it.
Okay, we'll have to talk about that. But yeah, the bankless guys had a great talk on Ethereum as this sort of triple point asset, right? Where it's a commodity, it's a store of value, and it's a capital asset. Okay. When I look at it, staking from a commodity perspective, unlike oil where you burn it, it's gone. It's this perpetual commodity, right? Like as long as Ethereum is a thing, right? Staking will be a thing most likely, and so it's perpetual in that nature. And then from a bond perspective, it doesn't necessarily. I mean, it'll function and provide this return as long as you're staking, right? And there is a requirement that you're keep your node running for the network, but you can stack up ETH doing that, and then you're compounding your ETH too, right? So you're compounding.
Well, you're securing the network, so you're contributing service to the chain, and you're being rewarded for that,
right?
That activity, and it's also locking up assets off the market. So from a supply and demand standpoint, you're creating more scarcity by doing that.
Yes,
so you're compounding value and creating scarcity at the same time. I mean, that's why I love staking too, because to me it's sort of a market signal. If the employment commons gets really successful, and everybody who's a member who's getting rewards for consumption or referrals is staking them,
sure,
and they're earning more for doing that, like for essentially putting their marker down. It's like a signal. It's like saying, no, I believe in this, right? Like, why would I do it if I didn't believe in it? So, but that, they say attention is value, right? So to me, staking is sort of my attention in the form of my assets, right? So I'm going to stake my assets, but that's really representative of my attention. And that's really where I'm putting my energy and my contribution, in that sort of investor way, if that makes sense.
No, certainly. So, I mean, to answer your question with Opolis and Commons, I mean, I'm super excited about staking, my Opolis rewards tokens. And, I think secondly, referring, getting more people into the system, we're all winning here. And then you can stake your referral rewards too, right? And
it just becomes circular. Combonding.
Yeah, there you go. Circular, it's just, you're combonding, right? So, no, I'm super excited about that aspect. And then, right, it does have value in that, right? If you can,
people are paying fees, right? So
right, you're paying fees, yeah.
So you're paying fees into the ecosystem, so that you're paying for services. I mean, eventually, the employment commons is going to be profitable. So, not dissimilar, like, even like exchanges like Uniswap, they're charging fees, right?
Absolutely.
But it's just really about getting volume up, which is really, it's interesting because in an exchange volume, a lot of that volume is sort of high frequency traders,
sure,
whatever, doing their thing. The really interesting thing about Opolis and the employment commons is it acts more like SaaS, but it's consumptive, but on a fixed schedule. So you've got, semi-monthly payroll runs that happen,
right,
that are really creating the value and multiplying it. So you don't need to have somebody who needs to make a trade, because it's just set it and forget it. So you're just stacking up value into this, and staking something like that could be really interesting, I think. I mean, that's why we're doing it, but like,
well, I mean, kudos to you guys. I mean, this whole theory or process of payroll mining, I mean, that's so innovative. This is completely new. I mean, can't think of anyone else who's done this.
No,
right? I mean,
we coined the term, so like, I don't know anybody who's done it either.
No, exactly. And for me, when I first learned about that in Opolis, I mean, those are the types of things. I mean, I've had really great success investing in this space, and these new innovations like what you've come up with, I've really seen had great success for new innovation. So I think exciting times for sure.
No, it is. It's going to be really exciting. So a little bit more transparency for our listenership on just what's going on with the Board of Stewards. So we do have, we're building requirements now with, for the actual token contracts and the distribution mechanisms and everything else. So like we're looking at a few different projects from inside the space. Superfluid is one. I don't know if you've seen them, but like we're actually going to talk about them tomorrow at the call.
Great.
So like they have a really, really cool technology. I'm not even going to drop it exactly what it is, but I'd be paying attention to those guys for sure.
Sure.
And yeah, we're going to be on track, it seems, based on, so one of our members is going to be taking on the project manager role to actually implement this technology. So we're doing a very community, driven sort of exercise here, which is great because we have incredibly talented people as members of the ecosystem that are now going to be contributing and then also multiplying their own value for that contribution, right? So,
right.
I guess I'll just drop it. So the goal to launch this is ETHDenver 2021.
Cool. All right.
So we got some work to do, but we've got about 3 months ish, a little bit less now, about 1 week shy, but call it 3 months, and the rewards token will be out in the wild. So
exciting.
Very exciting stuff. So we'll be doing demonstrations and real time, we have a technology that's going to instantly vest all of the lock tokens, right? So it'll be in real time vesting tokens. It's going to be a really cool thing to watch.
Yeah, I mean, I'm super excited. Glad to hear that. Can't wait to talk about it more tomorrow. I mean, it's going to be interesting. So we should probably talk a little bit about the, how, we're thinking about, the actual distribution of these tokens on the long view. I mean, just to give people a little bit of an insider look. Sure.
So there's going to be a DAO issued, right? So we're gonna create a DAO. The initial members of the DAO are the stewards, right? For decision making and distribution of tokens, and then all the members will be coming into the DAO as well, and then eventually we'll bifurcate all of that. So the governance and decision making on distribution will all be done through the DAO, which is pretty cool stuff.
Very cool.
We're also looking at spinning up a Gnosis safe, right, for some of the initial distributions while the DAO is maturing and we actually get that up and going. Let's see, what else are we doing? I mean, there's so many cool little facets to this that what I love about use cases like Opolis is it gives us an opportunity to use a lot of these natives and primitives that everybody's been building for the past 5 years.
Sure. Absolutely. And just to talk about the DAO a little more, and this idea of stakeholder capitalism, right? There does come, or can come, a little bit of responsibility with that, right? Like, self-govern what we're doing here. It does take a little bit of participation, but at the same time, you actually have a voice and impact in what's going on and where things are going, right? You aren't just at the mercy of a big corporation.
Well, some company is making decisions essentially for you and based on their best interests, right? I mean, that's the beef that I've always had is like, people defend capitalism as a great vehicle for creating value, and it's true. Value is the currency of buoyancy in economic terms for communities. But when you eliminate the ability for people to really participate meaningfully in value creation, aside from just collecting a paycheck, everybody will tell you that you can't get rich. Wealth is not created by working hourly for it.
Right.
Wealth is created through equity. So how do you create a new version of equity that essentially operates like old versions of equity in the form of creating value, but doing it in less of a scarcity-based model,
right? More
of an abundance-based model, infinite scalability of value,
right?
And also allows people to permissionlessly participate in said value creation without having gatekeepers and hurdles to get over that would normally preclude them from participating. That's the key.
Yeah. I mean, I can't say it any better than that. That's, that's the win-win, right? I mean, that's
what we're trying to build here.
Yeah.
I mean, I guess like I said, we're either crazy or insane and probably a little bit of both.
Sure. But, I mean, if you look at the space and how it's grown, I mean, this obviously is working. What we're doing and what we're trying to build here, it's gaining momentum. It continues to grow.
For sure.
And new new innovations like you guys have created here are going to bring more people into the bind, and we're going to weave even more great opportunities and innovations and keep growing, right? So
yeah, for sure. So now we're in the middle of open enrollment. You're a member. Anybody watching this or listening to this, give your 2-bit tour on the health insurance plans, the services, shared services. Why should people come take a look at this? Functionally, I mean, crypto nerdery stuff aside, why does this actually matter to regular people?
Absolutely. So I'll tell a little personal story. I'm a big story guy. Okay. So, in the last year, my wife and I were on 3 different insurance policies. I basically going back a little bit, we were still on my Cobra plan from my hockey career, right? From retiring from hockey. And then went on my wife's insurance. My wife changed jobs. And at one point it was we had a Cigna plan with this previous company. And then we had another Cigna plan with the next company, but different, slightly different plan. But I mean, telling your doctor, we're with Cigna, but new policy. I mean, it's just a mess. It's okay, sick of this, right? And then I met you and learned about Opolis, and as an entrepreneur, a self-employed person, I was like, this is perfect. Enough with this 3 insurance plans in a year, and not only that, but it's a great insurance plan through the Commons. So yeah, I'm a user. Onboarded here for the start of November, so haven't
not a user.
Yes. Key word. Thank you. Member. I'm a member. And so far it's great. I haven't had to really use any,
so you found that the insurance rates were really good, right? So comparatively to what you were looking at,
right.
The rates are good. You think that the network is good. The quality of the insurance is good.
Mm-hmm. Yes, I agree with all that. And then on top of that, I mean, I used to use Gusto for running payroll through, for myself through several of my businesses. And, it's easier for me to do it through, I want to be part of this stakeholder capitalist ideal and, earn rewards tokens. And it was really simple to run payroll through you guys, can set it and forget it, really. And the dashboard was really user friendly. You don't have to be, I'm not a highly technical programmer or anything, so
nor are you a payroll compliance specialist, probably.
Exactly. No, yeah. I mean, some of this stuff is not easy to use, right? When you get in there, and
the enterprise stuff is terrible because they over-engineer the hell out of it. And
yes, agreed. I mean, I can't tell you how many times I've had to call Gusto. Hey, how do I do this? No, honestly, done that a lot. And so, found Opolis to be really simple to use and I mean, really great for someone like myself. So anyone who's a, solopreneur or gig worker, whatever you call yourself, freelancer, contractor, etc.
Sole practitioner, independent contractor, whatever you want to say you are.
Whatever you are, come join us in the comments, right?
Yeah. So I guess just to punctuate that, we are in open enrollment. So for those of you that are listening, now is the time of year that typically, the state exchanges are sort of offering enrollment. This is a good time to come and compare what the services and the features of the Commons offer as it relates to the comparison, right? The alternatives. Actually just got off a call today with another person in Colorado. He was telling me, Lily, for a plan that's probably, 30 to 50% less in quality, higher deductibles, much higher.
Sure.
It's several $100s more per month. So like
Yeah,
you can
it's
save
crazy.
money and get better coverage and get the whole stack of shared services and support for your
Right.
small business, and literally it's free for 12 months. So like,
Right. Come on.
and then even after that, it's like a third of what these other services are going to cost and charge you. Like even
Sure.
Guts does what, $149 a month plus $6 per person.
Yeah. Yeah. I don't know what I was paying.
That's last I knew what it was. But
yeah, I mean, I had 6 to 8 employees at one time too. So it's like,
several $100 a month. But
Yeah.
yeah, I mean, in this case, you're literally talking about free, and then it's all based on consumption. So, whatever you run for your payroll, it's 1%. So
sure.
pretty easy stuff. All right. Well, let's see if we've got any questions from the community. If we do, let's take any questions. Let's open that up. Q&A is open. So if you guys want to jump in and ask any questions, feel free. We'll just go ahead and keep chatting for a second here unless something pops up. And all right. So predictions, what's your, do you have any other, I mean, aside from Opolis aside and some of the other obvious ones aside, do you have any like off the radar sort of pet use cases that you like?
For blockchain tech.
So for Web3 sort of emerging stuff.
Yeah. So well, first, I guess to talk about Web3 a little bit, we've seen this DeFi craze, and we see a lot of projects that will maybe call themselves DeFi, but they aren't really, right? I mean, for example, there's some credit system projects out there that are utilizing the FICO, score system. It's like, well, that's not decentralized, that's not truly DeFi.
No.
There's I came across, I think it's called Union.finance, is a sort of truly kind of like decentralized credit system, right? Where you can vouch for other people and kind of establish this system of credit in the community. It's an interesting project to me.
What's that? Union.finance?
Yeah, Union.finance. I just learned about it literally a couple of days ago, and sent an email to learn more. But that's interesting to me. Our project actually through Merkle Mountain, hopefully launch kind of in the next 6 months, hopefully. I'm really excited about that. But I see, I guess from kind of investing future perspective and kind of where we are in these crypto cycles, I am kind of a believer in this 4-year cycle we've seen. I've lived and watched 2 or 3 cycles really previously. And, I think we're kind of on the cusp of the next wave here, right? Like, and that wave is, and this is what I've been waiting for all along, is an institutional space, institutional money and investment moving into the space. And you see corporations like MicroStrategy investing $450 billion, million, not billion, into Bitcoin.
I was say, dude,
right?
That's like,
oh man,
3x the market cap.
Seriously. But I think that institutional wave's coming, and that'll bring, some people maybe don't like that because of how it looks from, corporations are doing this and that, but all of this brings light to blockchain tech and crypto.
Yeah, people pay attention to it.
Yeah,
more and more people are paying attention to it, and
yeah,
the coolest thing about it is you can put $450 million in and you can't control it.
Right.
You don't own it.
Exactly.
You're just storing value and betting on scarcity economic, models to create deflationary price increase, right? So increase in price pressure based on supply and demand. And I mean, it's pretty basic economic stuff, but it's interesting to me that it's taken this long though. Like,
yes, I agree with you.
It seems pretty obvious to me, but and then some of these guys, you listen to them now, they're like all in. They're like, oh, I'm going to ride this thing till, whatever. But
Absolutely.
Where were you even 2-3 years ago?
Hey, I agree with you. It's funny. It's like, people don't believe in Bitcoin until it hits 15,000, right? It's like,
I know. I got all my neighbors calling me up again, the ones that I was telling to buy Bitcoin at 1,000. And they're like,
yeah.
They're like, hey man, I saw Bitcoin went up again, dude. Should I get in now? I'm like, dude,
I know, yeah. Now or never. I mean, it's at what point? Yeah, I get. At what point do you get it? I mean, I still talk to people. I talk to people in the institutional space. Talk to a guy the other day, and I have great respect for a lot of these people. They're smart people, but they don't. I don't know. They don't grasp it or understand it maybe fully, and they still have that too much skepticism, in my opinion, to take the time to learn and really understand what's happening. Because this is happening. To me, it's like inevitable. It's been a lot of highly touted people. That Raoul Pal guy who does Real Vision Finance, that channel. He gets it, and he talks about it's really inevitable. It's coming. So there's a lot of people out there now, and it's gaining momentum.
Well, I totally agree with you, and it's going to be really interesting to see what happens over the next, even 6 months. I know I was saying this 2 years ago, so like every 6 months is interesting, but like it seems like it's kind of like playing one of those coin pusher machines. You keep putting in the coins, eventually they kind of get pushed to the edge, and something's going to fall, something's going to go. Yeah, I feel like we're at that place where, like, if you look in the rearview mirror, like use cases, tech maturity, privacy, security, like for like even Ethereum and a lot of things, dude, it was so immature. Like I think the assumption was that the maturation cycles were going to be faster.
Right.
ETH2 is literally just coming, and we were talking about ETH2 2 years ago at ETHDenver.
Right.
Like, so it didn't come fast, right? So
yeah, but
it feels like to me that there's been sort of a giant sort of wave of quiet pushing that there's just going to be this big sort of like gate opening, right?
Yes,
I could be wrong, but it seems like that's what my intuition is telling me, is that there's going to be some, and maybe projects like Opolis or others that are more accessible to real world people. Maybe that's it. Maybe it's institutional investors getting involved. Maybe it's companies like PayPal letting people use it.
Right.
I don't know, but like it feels like there's a lot of things staging up that could just like, really push this over the waterfall.
Oh, I agree with you 100%. They're all gateways, right? It's all introductory and introducing these concepts and use cases to people, just like Opolis is doing. So
it's inevitable. It's going to happen.
Yeah.
Well, Barry, thank you for your time, man. I really appreciate it. And thank you to everyone else listening to this episode of Opolis Public Radio. Remember to subscribe to Opolis's YouTube channel for more videos just like this, and subscribe wherever you listen to your podcast if you prefer just the audio version. If you're a freelancer, gig worker, solopreneur, sole practitioner, whatever you refer to yourself, looking for an employment solution, come join us and be a self-sovereign worker at Opolis. Make sure to join us at opolis.co, that's opolis.co, and check out the employment comments. So we'll see you on the flip side next time. Thanks, everybody.
Cheers.